Corn Brownfield anchor reporter Megan Grebner. We're at the 2019 NAFB Trade Talk in Kansas City. With us is grain and oilseed analyst Erin Fitzpatrick with Rabo AgriFinance. Hello.
Good morning.
Good to see you today here in Kansas City.
Thank you.
It has been a very interesting year. I think it's probably the greatest understatement for 2019 for corn and soybean farmers here in the U.S. Let's start first and talk a little bit about how this year has progressed and where it set us up to where we are today.
Sure. Well, I mean, corn and soybean farmers had a lot of factors to look at this year. We've had obviously a huge amount of politics playing a role. And then also, once we got into the growing season, we had a lot of weather issues. It started off with incredibly delayed plantings that ended up in a record amount of prevent plant acreage. And now we're here in the fall, and I mean, we're halfway through November, and there's only 2/3 of the corn harvest in the bin, and still a good chunk of soybeans that are sitting out in the fields, and it's snowing in the northern plains. So it's been a very challenging year, especially for farmers who have experienced these bad weather outcomes.
When we look at a year like this, how does it set us up long term, or even short term, really, as we're looking at the markets, and what are farmers really paying attention to?
Yeah. So right now, a lot of the corn and soybean farmers are still paying attention to harvest. The crops that have been put into the bins are wet. They haven't done hardly any field work here in the fall. And that was the case last fall as well. So, farmers are still making a lot of decisions regarding this crop that's not quite done yet. And looking ahead to next year, those decisions are put on the back burner because they haven't done fall field work. And then there's going to be some guys that are still harvesting their crops next April probably because the corn hasn't gotten in the bin. So, we're delayed this year, and it's going to have implications for next year. It's going to delay the decision-making process for farmers, and it's going to cause some challenging planting situations when you look at compaction in the field, weeds that are in the fields of the prevent plant acres that are out there, and then just the overall delays. It's going to also trickle into next spring season and farmers' decisions and field work then.
Let's talk a little bit about kind of the price picture and what has been going on as it relates to the markets as we're looking at corn and soybeans.
Yeah. One good thing for farmers this year has been the price volatility, and also for farmers in the U.S. looking at cash prices. So the weather rally that we saw this year, and then the volatility around trade talks and what's potentially going on with China, has allowed farmers who are diligent marketers to actually lock in some decent prices for this year and for next year. The cash prices, we're still seeing relatively strong basis levels in the eastern corn belt because of the smaller crops that were planted there. So I think, overall, if farmers are diligent, they watch the markets, and we have seen volatility driven by weather and politics, it's given farmers a good opportunity if they chose to or made good marketing plans to lock in some margins for this year and next year.
Are we surprised to see how much outside influence, not things that are tangible, so not our normal outside influences or outside factors, but like trade talks, Twitter, China, all of these things that are impacting these global newsmakers that are impacting what's going on here in the U.S.?
Yeah, sure. I mean, as a grain and oilseed analyst, we've had to change focus a little bit of what we're looking at when we talk about what's driving prices. Historically, we would talk about policy in Russia, Argentina, China driving markets. But now we have to watch Twitter and follow what is going on with the trade deal, and also the impact of having payouts like the MFP this year and the impact that it could have on U.S. farmers. So certainly that is playing a role, and it's a shift from what we've seen. I think the other factor that's changed in recent years is that the CBOT price is trading a little bit more on global market fundamentals, and that's leaving cash prices and basis in the U.S. to do a little bit more of the heavy lifting of what's going on and driving U.S. S&D and U.S. planning dynamics. So, U.S. represents, in the case of global trade, in some cases, much smaller percentage than we did historically. Brazil's been the primary supplier of beans to China, and so board prices are moving in those dynamics, and then cash prices in the U.S. are being driven more of what's going on fundamentally here.
When we look at some of the other factors, how much are we watching what's going on in South America right now in terms of their crops, to how it relates to maybe as we're thinking about making those final decisions or trying to make final decisions for 2020?
Yeah, sure. I mean, there's not many farmers in the U.S. that aren't watching South America more than ever because of what's been going on in the trade flows. We've had some challenging, a few blips in the planting season in Brazil. It's still early there to say, but they are looking, because of the currency, they are looking at pretty good margins, and they're continuing to expand production and planting of soybeans and corn. It's not a question of are they going to flatline, it's just a question of how much are they expanding, and we are expecting them to continue to grow. When you look at corn acreage in South America, because it's a double crop, they are able to still expand corn acreage after they harvest soybeans, and that is continuing to happen. So we are watching what's going on in South America. Farmers there are still making good margins, and we're looking at expansion of crops continuing there.
How do we feel about going into 2020? And we talked maybe a little bit about what farmers should think about in terms of pricing and risk management and the kind of the big picture for them for next year.
Yeah, I think, a lot of the things that impacted farmers this year are going to be key themes next year. It's going to be an election year in the U.S. in 2020, so politics are going to be at the forefront. We saw an MFP payout this year. We saw a lot of headlines around trade negotiations. That's going to continue, we believe, into 2020. Farmers should have a more normal planting window in terms of weather, but they're still going to be struggling with some of the challenges that we are facing through this harvest into next year. So we do think a lot of these factors are going to continue to cause volatility in the U.S., and with volatility should come opportunity, like I said a little bit earlier, for farmers to be able to lock in margins. But I think it's important for farmers to know what their costs are, know when they see a price on their nearby cash basis level that they can lock in a margin and lock that in when they can as we head into 2020.
Erin, anything else?
I think that's it.
All right. From Kansas City, Missouri, I'm Megan Grebner for Brownfield.